Hi guys, today let us discuss how a trailing stop actually works and what is the use of a trailing stop. So now those of you who've taken the course at Hexor know that this here entry that we see, this is the entry with the zigzag strategy, right? Now assuming that you have taken an entry here, and what you want to do is you want to trail your stop loss. So when I say trail, I mean that initially we have a stop loss here, and as the market starts to pick up, we will change the stop loss to this low. Eventually we'll change it to this low, right? And then we will change it here. In this case, we should probably be exiting around the same level here, right? This would be our exit. Now there's a tool called a trailing stop. What it does is it would basically keep moving your stop loss at a fixed market value, right? So when I say fixed market value, what I mean is, let's say I specify that if my stop loss, if my entry is at 588 and the low is at 577, that's about 11 rupees, right? So what I do is initially my stop loss is 11 rupees. Now I want to instruct the system that as the market moves up, I want to keep my stop loss at a maximum distance of about 5 rupees from the current price, right? So if the price moves to say about 600, my stop loss should be at 595, okay? And as the price keeps moving up, the stop loss will also keep moving up, so that when the stock starts to fall, I am out of the market in profit. This is generally used in intraday to protect your capital. So since you know that I do a lot of intraday trading, it is a very helpful tool for me to trail my stop loss and safeguard my capital, also safeguard my profits. All right. Let's take a look at how this is done by using the Upstocks terminal, and we will be using something known as a bracket order or a OCO order. So let's say, for example, we are currently looking at buying an option of Nifty for 3rd October, which is at 11,550 PE, okay, with the strike price. Current premium is 84. Now this is just an example. So assuming that, let's say for some reason I am expecting the price to touch 40 rupees, which is probably my support area, right, for the premium. I'm expecting Nifty to fall and I am expecting premium to be around 40, which is where I want to enter the market. So first of all, I will be using the order complexity to be OCO, which is one cancel the other. Order type would be limit if you want to buy below the market price. If you want to buy above the market price, then you will use SL limit. All right. So in our case, we want to buy below the market price, so we use just the limit order. SL limit if you want to buy at the resistance after a breakout is when we have used. So then you'll be using more options. Anyway, let's not get to that right now. Position, this OC order or the bracket order that we use for a trailing will always be used only for intraday movements. All right, it cannot be done for delivery. Now that we've specified the entry price, we have to also specify here, it is mandatory to specify the stop loss and the target. So what would happen is, if your stop loss gets triggered, the trade would, the target trade, the instruction will be removed by the system automatically. That's why it's called one cancels the other. So once you take the trade, either your stop loss or your take profit, if either of it gets hit, either target or the stop loss, the other will automatically be removed. So now if I'm buying at 40, let's say I want to keep my stop loss at 20, okay, premium of 20. So I specify not the price, the difference. So let's say if I want to keep my stop loss at 30, I will just say 10. So 30 rupees would be my stop loss. So I have to just tell how much difference I want to keep my stop loss at. So let's say I'm doing it at difference of 25 rupees. This here is the target. So here again, if I'm keeping my stop loss at a distance of 25 rupees, I would keep my target at say 50 rupees. 50 rupees gap. So that means I entered 40 premium and I'm exiting at premium of 90. Right? This is the regular stop loss. Now here you can also trail this stop loss. So what this shows is this is the multiplier into the tick size, which is generally 0.05 for most of the instruments on the stock market. Here that's a tick size of 0.05. So that means when it says 1, I'm trailing the stop loss with a gap of 1 rupee, which means price comes to 40, my trade gets executed and my stop loss is at 25. Alright. Once the market starts to move above 40, alright, that means when I am in a profit from my entry price, now my stop loss will start to get trailed by 1 rupee. So initially it is at 25. Now when the price becomes 41, this stop loss, initially a stop loss is at 15, this stop loss will move to 16. Price becomes say 45, this stop loss becomes 20. Right? That's if I'm keeping a trailing of 1 rupee. Now this would only be moving on in favor, right? This will only move in positive, it will not move negative. So if the market falls, you will be out of the market. So let's say I want to keep a trading stop of 10 rupees. So what I would say the multiplier would be 200. So here it shows 10 rupees is my trailing stop loss. So after the market comes to 40, I get my entry and then price reaches 50. Now my trailing stop gets activated. Okay. And from 15, it would change to 25. All right. Now let's just see how this works. Yes, we were able to place our trade. So here it would show in the orders and it is open. Now you can always modify. When you go to modify, you will be able to modify your entry price. Okay, that's a limit order. Stop loss, take profit can also be modified. What you cannot modify is basically your trailing stop. It cannot be modified, it cannot be deleted. So just keep that in mind while taking the trade. But more or less, it is a very good tool for traders who would like to enter in the morning, exit at the same day, and they are expecting volatility in the market. So they would like to protect their positions, right? That's when the bracket order or the OC order is used. And it's a very simple but very effective way to safeguard your trading profits as well as safeguard yourself from your losses. Alright, any questions about this? Please feel free to post in the comments. See you again in the next video. Bye-bye.